Good morning. This is Horizon's Middle East and Africa, our top stories this morning. Israel launches multiple airstrikes across Gaza overnight, shattering the ceasefire that paused 15 months of fighting. The Hamas-run health ministry says at least 200 people have been killed. Asian stocks gained for a third day as investors ramp up bets on China's tech companies. BYD hits a record high after launching new EVs with ultra-fast charging. Gold continues to soar as geopolitical risks mount. Plus, President Trump says the U.S. and Russia are already in talks about dividing Ukrainian assets. He speaks with President Putin later today. Well, it's just gone 8 a.m. across the Emirates. I'm Giovanna Bersachi in Dubai, keeping a close eye on geopolitical developments over here in the Middle East. With the airstrikes on Gaza overnight, the death count up until now is over 200. So we will be talking about that, the repercussions, what that means, of course, for those ceasefire discussions. Big focus over here in the region. But markets, what we are seeing is a bit of a dip in futures this morning. S&P futures down about 0.3%. Similar situation for NASDAQ. Down about 0.5%, despite the better end to the day yesterday. A little bit of green by the end of the day for Wall Street. This despite the fact that the headline retail sales figure came in slightly lower than expectations. But what analysts in the market are saying is that retail measure actually surprised the upside. So a bit of a mixed bag there. But the upshot was that it was a better close for Wall Street. Euro stocks futures leaning towards the green as well, up 0.3%. We have that important Bundestag vote later today in Germany to get through that massive defense and infrastructure package. It would be the largest in many generations, actually ever in history. So a big potential catalyst for European markets later today. And then Asia Pacific, the handover today, quite positive, up 0.9%. A lot of green on the screen when it comes to some of those tech stocks. We will talk about that shortly. But BYD very much in focus. That car maker up almost 6% in trading. Flipping over, though, I just want to draw on some of the price action that we're getting in what would typically be safe haven assets, given what we've got out of the Middle East overnight with the attacks on Gaza. The USD is seeing a bid. We're about 15 basis points higher. 10-year yields also almost 2 basis points lower now. So we're through 4.30. 4.28 is where we're at. Gold, all-time record high once again. Remember, on Friday, we breached $3,000 for the first time in history. Today, more money keeps pouring into gold. Again, once again, on geopolitical concerns and on the fact that we are seeing, up until now, a weakening of the USD. So those trends have combined to give gold more and more support, up 0.4%. And then Brent, no surprise, typically is the release valve whenever you get geopolitical risk premium. Today, trading above $71, 0.2% firmer. All right, let's also broaden out and talk about how markets in Asia are faring. Avril is in our Singapore studio, and it has been quite the positive handover today, Avril.
Yeah, there's a lot of green on the screen, and today the gains are being led by Chinese shares, in turn being led by tech, as well as Chinese firms listed in Hong Kong. It's a combination of factors. You had the consumption briefing a day ago, and even though analysts highlighted it didn't do enough in the way of showing us how they intend to lift income levels, it does look like on the margins it is providing a bit of optimism at a time when Chinese stocks still looking cheap from a valuation perspective. And then, of course, there's a lot of earnings optimism. Some of the big Chinese tech names report this week. And then when it comes to some of the technological innovations, you're seeing big Chinese names making headway. So the likes of Baidu, which surged 10% in its ADRs, also following suit in Hong Kong trade today. BYD, as you mentioned, that stark climb after it unveiled its 5-minute battery charging. So that's what's lifting the Chinese equities performance. Japan also doing fairly well today, helped by banks as well as the trading houses. And this is all coming despite this geopolitical overhang. Jumana.
Avril, thank you so much. And now to our top story. Israel launching a series of military strikes across Gaza 2 weeks after phase 1 of the ceasefire deal expired. Gaza's health ministry reportedly says at least 200 people have been killed after Prime Minister Benjamin Netanyahu vowed to go after Hamas with increasing military strength. The White House says the Trump administration was consulted ahead of the attacks. Joining us now is Paul Wallace, who leads Bloomberg's MENA economy and government coverage. Just get us up to speed. What do we know about these airstrikes?
Hi, Jemima. Well, they started early this morning, and as you said, this basically shatters the ceasefire that's been in place since mid-January. And they've come about because negotiations between Hamas and Israel have stalled, and they've pretty much gone nowhere. We finished the first phase of the ceasefire at the beginning of this month, and we were meant to go to a second phase, which was about a permanent ceasefire and other key topics such as the future governance of Gaza and its reconstruction. But they, as I mentioned, did not go anywhere. So Israel has restarted a bombardment pretty much across the Gaza Strip.
And what do we understand vis-a-vis where these airstrikes are going to end? Is this a one-time only event, or is it effectively the end of the ceasefire and the resumption of the war?
At the moment, it seems like the latter. Israeli Prime Minister Benjamin Netanyahu has talked about this being the start of strikes that will become even more intense. It may be a pressure tactic on Hamas to get it to make concessions, to get it to come back to the negotiating table, and Israel may hope that these strikes don't have to last for very long, a few days at most. But even if that is the case, there's a good chance Hamas does not back down and that Hamas doesn't show any signs of making concessions. For its own part, Hamas claims that Israel is the one that has consistently broken the terms of the ceasefire, and it puts the blame on the stalling of the talks. It lays it at Israel's door.
In the last couple of days, there has been a flaring up of geopolitical risk in the region once again, not just specific to Gaza, but also the airstrikes on Houthis, the strong language that the Trump administration is directing towards the Houthis, even across the Lebanon-Syrian border. How are all of these stories interlinked?
You're right. We've gone from relative calm, if you look at the places that have been involved in Israel's multi-front conflict since late 2003, to we're now back to war in Gaza. The Houthi in Yemen, we've got large-scale American strikes on the Houthi positions there, and that's getting more intense, as you mentioned. Instability between Lebanon and Syria, and it just shows you how everything that's happened since October the 7th, 2023, when Hamas attacked Israel, is still with us today. All the things that has led to. All the fragility that it has caused, they're far from being resolved. I think at the moment the two big things are definitely what's going on in Yemen with the U.S. strikes on the Houthis and Gaza, and both of those could potentially be with us if that's the way to put it for several weeks, if not longer.
Paul, thank you for bringing us up to speed on the situation. Paul Wallace, who leads Bloomberg's MENA economy and government coverage. Now, President Trump is set to speak with his Russian counterpart, Vladimir Putin, today amid a U.S. push for a ceasefire with Ukraine. The two nations are already discussing how to divide, quote, assets in Ukraine, sparking concerns that Trump may sacrifice Kyiv's interests in a deal with Putin. Speaking on Monday night, the president called it a bad situation.
Tomorrow I'm speaking with President Putin of Russia to save some soldiers who are in deep trouble. They're captured. Essentially, they're surrounded by Russian soldiers. I believe if it wasn't for me, they wouldn't be here any longer. I was able to get them not to do anything at this moment. But it's a bad situation in Russia, and it's a bad situation in Ukraine.
Well, for more on this, we're joined by Bloomberg's Bill Ferries. Bill, the president himself, President Trump, has been sort of previewing this call that he's going to be having with President Putin, but he's talked about the division of so-called Ukrainian assets. What assets is he referring to?
Well, that's the phrase that I think is generating a lot of alarm in both Ukraine and across Europe. Assets, we don't know specifically beyond the two big things, which seem to be land and perhaps energy supplies, power stations, things like that, that Russia has managed to seize control of since launching this full-scale invasion just about 3 years ago. But the land will be a huge question. There's a report in Semaphore that we have not been able to confirm that U.S. authorities are weighing whether to cede Crimea as Russian territory. Of course, that's the land, the peninsula that Russia took on its first attack of Ukraine in 2014. But there's also been a lot of talk about whether Russia gets to hold on to all of the territory it's taken. Almost 20% of Ukraine's territory, actually, since 2022. So that the idea that Donald Trump and Vladimir Putin might be discussing this or even making some kind of an agreement about it without Ukraine, without other European nations being a part of those negotiations is raising a lot of alarm in Europe.
Well, I was just going to bring up that point and the fact that there's even suggestion of the two sides, and here I'm talking about U.S. and Russia, having discussions already about the division of assets without the necessary inclusion of Ukraine. Does that not put Ukraine in a very vulnerable position, given that they have already supposedly signed up to this 30-day truce?
It certainly does. I mean, you can very easily imagine a scenario where Donald Trump and Vladimir Putin make some sort of an agreement that is really unacceptable to both Ukraine and its European allies, but then puts Ukraine in the position of having to go again against the U.S. We saw when those talks in Washington between Zelensky and Trump really just kind of went up in flames, how the U.S. decided soon after to withhold intelligence sharing and withhold the delivery of some weapon systems. So the U.S. has quite a bit of leverage over Ukraine still. If they don't think Ukraine is going along with the deal that the Trump administration made with Putin, they would likely come under extreme pressure to back down.
Bill Ferries in Singapore, thank you so much for the latest. Now, President Vladimir Putin has allowed some international funds, including American ones, to sell Russian securities. According to a presidential decree, U.S.-registered 683 capital partners will be able to buy securities of Russian companies that were owned by about a dozen Western asset management and hedge funds. Templeton Asset Management and Bailey Gifford were amongst the funds that received the right to sell those assets. And still ahead, we get the market outlook with MacroVisor as investors brace for monetary policy decisions while also weighing geopolitical tensions. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Bersecci in Dubai. Asian stocks are tracking a rebound in the S&P 500, while U.S. equity futures are slipping in Asian trading. Oil prices, meanwhile, rising for a third day due to escalating Middle East tensions. Joining us to discuss this and more is Ayesha Tariq, CEO and founder of MacroVisor. Ayesha, good morning to you. Well, it felt as though the market had sort of turned its attention away from the geopolitical risks in the Middle East region, but of course that has all come back to bite overnight. How are you thinking about the impact of the events over the last 24 hours on some of these safe havens, including the likes of gold, which continues to make all-time record highs?
Hi, Joanna. Thank you for having me back on. So, yes, a lot of developments overnight, and none of them good, obviously. See, coming into the year, our theme was called Shifting Sands. And one of the reasons I named it that was because of the uncertainty that we thought would, take place this year. Much of it, stemming from the U.S. But it looks like, the uncertainty is sort of spreading throughout the world. So it's not just the U.S. Now we're seeing uncertainty in the Ukraine and Russia, now in the Middle East. And of course, we have, China being the wild card. So all things considered, I think, we are seeing this bid for gold. Now, I would be a little bit careful here with gold because once we've reached that target of 3,000, and we are going to see a lot of people jump in. But, this is the time when, positioning gets too stretched and there could be a pullback. Having said that, I think it's still a really good place to hide out for people. And we've seen throughout the first quarter, most countries and people buying gold.
Yeah, as evidenced by the price action. The other big event for markets this week, obviously, is the Fed meeting that's coming up tomorrow. The Fed are in a position where there's a lot of uncertainty about the impact all of these tariffs might have on the state of the economy from a growth perspective, but also from an inflation perspective as well. How do you expect the Fed Chair Jerome Powell to navigate both of those perhaps opposing forces, a downside push to growth, but perhaps an upside inflationary push to come through?
So I think the Fed is playing it very wait and see. They're playing a wait and see game. And for what it's worth, I think they've been quite calm throughout all this time. So they did signal a soft pause. And what's important is this meeting, we also get the summary of economic projections, right? So we get to see what the Fed is thinking a little bit about the economy, about inflation. But if you remember, during the December meeting, the previous SEP, they did increase inflation quite a bit. So both at the headline level and the core level. So I think as long as inflation, and so they're actually seeing inflation remain sticky until the end of the year. And as long as inflation remains around that number, I don't think we're going to get more than 2 cuts because the economy is basically signaling stagflation right now. And the Fed knows it, the economy knows it, bonds are pricing that in. So I think what we're going to see is we're not going to see a big difference in the SEP this time around.
Yeah. Okay. So what does stagflation mean for the direction of travel for U.S. equities? Many sell-side analysts have started downgrading their end-of-year targets for the S&P. What do you think happens?
That's right. I mean, it's understandable, Jumana, because when you look at, stagflation, which means low growth and high rates, high inflation, both are kind of not really great for equities, right? And what we are seeing is a downward revision in earnings estimates. And these revisions are across the board, by the way. So a lot of people were kind of saying that we'll see the Mag 7 earnings revised lower, but it's not just the Mag 7. It's actually the entire S&P 500, and these are the biggest companies, right, in the U.S. So having said that, I think, the slower growth is going to hurt, companies. And more importantly, the uncertainty sort of keeps them away from making decisions. And that's very important, right? So when they don't know whether they should invest or not, allocate capital, that's when things start to slow down even further.
Yeah, so impact both on business confidence and on consumer confidence to watch out for. Ayesha Tariq, CEO and founder of MacroVisor, thank you so much for coming on our show today. And coming up, a Chinese EV maker BYD unveils a new system it says can charge electric cars in 5 minutes. How China's auto giants are dominating the global car market next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Persechi in Dubai. Shares of BYD are surging in Hong Kong after the Chinese EV maker unveiled a new system it says can charge electric cars almost as fast as it takes a regular car to refuel. For more, let's go to Bloomberg transport reporter Danny Lee. So 5 minutes to charge an electric battery, that really does feel like a record. And the reaction in markets is pretty positive today. BYD up 6%. So tell us more.
Yeah, investors taking to this new round of innovation that BYD is pushing through. As you said, in 5 minutes, you can get 400 kilometers of range in the EVs that BYD are now rolling out. And that's far more than, say, a comparison like a Tesla is. Like you get 275 kilometers of range in 10 minutes. So this is a new benchmark that many analysts are saying is a strategic shift and a new all-time high when it comes to the kind of innovations that BYD is setting the market to chase after, particularly when it comes to smart driving and other innovations as well. So yeah, it's quite a step forward, and also just really seeing the reaction in the stock push higher as a result.
Yeah, but Danny, there are perhaps a few people around the world, specifically one man in particular, who may be watching the developments with the Chinese automakers with a little bit of hesitation, and that is President Trump. We know that they're going to be applying tariffs on auto imports. How is that likely to affect the broader ambitions of Chinese automakers?
I think the Chinese automakers have come to the realization that the US market, one of the world's biggest auto markets, is just not going to be open. And as much as the US tries to defend its home turf, it's just outside of its own borders. It just cannot control. And you see the success in emerging markets, whether it be in Buenos Aires, in Bangkok, or in Johannesburg, the increased proliferation of Chinese brands on the streets, on the roads, whether you see a BYD or a Great Wall Motors or Chery, they are becoming increasingly familiar on these streets alongside a Volkswagen or a Ford. So the success that they're having, because they are just so much more affordable, they have greater tech, and the willingness to really undercut some of the global leaders in auto just shows the success they're having. And in terms of the gains that they are making, the market share, and what that means for this kind of future makeup of Chinese brands and the rest of the world.
I guess my question, Danny, is what does success actually look like for a Chinese automaker these days? Is it gaining as much market share as possible within China, or is it trying to find markets that aren't imposing tariffs and therefore would be more open to their autos penetrating that market?
I think it's a combination of both. The fact that the Chinese are willing to absorb these tariffs and still in places like Europe where they've been punished, but it's making big inroads and strides in places where there are no tariffs, and so therefore they are really increasing their sales at quite a click. And so the results are showing that they may well end up with a market share of like 33% globally by the end of the decade, and that's a pretty hefty share compared to where things stand right now.
Yeah, I would say anecdotally, driving around Dubai, you do actually see a lot of Chinese EVs around. So that's definitely one market that is growing for them. Bloomberg transport reporter Danny Lee, thank you so much for the latest. Now, President Trump says Chinese leader Xi Jinping will visit Washington in the not-too-distant future without giving an exact time frame. Discussions between the two countries on trade and other issues are said to be stuck at lower levels, with both sides deadlocked on how to proceed. Trump has said he is open to reaching a fresh deal with China, even as he intensifies pressure on Beijing. And coming up, Israel attacks Hamas targets in Gaza as truce talks falter. We discuss the latest from Israel with Ryan Bohl next. This is Bloomberg. Good morning. This is Horizon's Middle East and Africa, our top stories this morning. Israel launches multiple airstrikes across Gaza overnight, shattering the ceasefire that paused 15 months of fighting. The Hamas-run health ministry says at least 200 people have been killed. Asian stocks gained for a third day as investors ramp up bets on China's tech companies. BYD soaring to record after launching new EVs with ultra-fast charging. And gold hits an all-time high as geopolitical risks mount. Plus, President Trump says the U.S. and Russia are already in talks about dividing Ukrainian assets. He speaks with President Putin later today. Well, it's just gone 8:30 a.m. across the Emirates. I'm Jumana Bersachi in Dubai, keeping you up to speed on all of the developments out of the region with the resumption of the Israeli airstrikes on Gaza overnight. The death toll at just above 200 now, per the latest figures released. We're going to talk more about that and what it means for the region. It is having a bit of an impact on sentiment. U.S. futures dipping towards the red today, down 0.3%. NASDAQ down 0.5%. This after better close for Wall Street yesterday. We had the retail sales figure come through. That was going to be a big focus for investors to see whether consumer confidence had been dented by some of the uncertainty in the air. And so the headline figure came lower than expectations, but that control figure that many other analysts point to as perhaps a more important indicator and one of the main inputs into core PCE, which is what the Fed looked at, surprised to the upside. So a bit of a mixed bag there. We did get a positive end to Wall Street, not the case this morning. Euro Stoxx futures also up 0.4% as we head into that important Bundestag vote later today. The German fiscal package, the largest in history, will likely go through the lower house, just needs to be signed off by the upper house, in which case it does set the sail for a huge fiscal boost out of Germany. And that has been a major theme for European markets as we've been talking about the last few weeks. And then the handover today from Asia Pacific markets is mostly positive, up 0.9%. We were just speaking about the big uptick in Chinese tech stocks, namely on back of BYD. That is a big focus for those investors this morning. Switching over just to keep track of some of the safe havens and what we're seeing in light of the flaring up of geopolitical risk once more. The USD catching a bit of a bid today, up 15 basis points, so some green transpiring there. 10-year yields down about 1.5 basis points, so we're through 4.30 to the downside, again, as money goes into fixed income. And then gold, all-time high. Once again, we broke through $3,000 on Friday afternoon. We're back above it this morning, 0.5% higher today. And then Brent, also oil, the oil complex, catching a bit of a bid this morning, up 0.3%, just trading above $71. All right, let's check in on how markets in Asia are faring as well. Avril is in our Singapore studio. I briefly gave an overview of the handover from Asian stocks, which for the most part has been pretty positive. Avril, what are you watching out for?
Yeah, I guess that caveat is important for the most part because we are seeing today the Jakarta index, of course, the Indonesian stock benchmark, tumbling by 5%. And this triggered a trading halt. And it was dragged by some of these economic woes as well as concerns about weaker spending ahead of the Eid holiday. So that is what we're seeing in terms of a bit of a negative sentiment in the region. But as you alluded to, Chinese tech shares are really driving gains in the region. The likes of Baidu, Alibaba on AI developments. But also when you look at BYD, after it unveiled that 5-minute charging system, another stock that we're closely watching in the region today, Xiaomi, because its earnings are due. There's optimism about strong results along with a new SUV being unveiled. But flip the board, this is a stock, Xiaomi, that's run up about 300% in the past year, so roughly quadrupled. And we're also seeing how it's now trading above the average analyst price target. So, you know, there are those in the markets that are kind of positioning for big swings post earnings. If you look at how investors are boosting their options bets, you can see that pricing post earnings volatility, that's a lot higher than in some of its past results. So just keeping things in perspective as we wait for some of these Chinese tech names to unveil their corporate scorecards.
Yeah, big earnings coming up over there. Avril, thank you so much. Avril Hong in Singapore. Now, back to our top story. Israel says it won't stop fighting until all Gaza hostages are freed after launching a series of military strikes on Hamas targets. Gaza's health ministry says at least 200 people have been killed in the fiercest bombardment since phase 1 of the ceasefire deal expired. Joining us now is Ryan Bohl, senior Middle East and North Africa analyst at RANE. So the death toll continues to climb this morning. The latest show figures of more than 200 as Israel have resumed these airstrikes on certain positions in Gaza. Is the ceasefire, for all intents and purposes, dead?
I think that that's a safe thing to say at this point. The humanitarian situation is catastrophic. The aid has been suspended, and now we have a resumption of hostilities. But while it is dead, it can also be resurrected rather quickly, particularly from the Israeli side. And the Israelis have signaled that they would carry out phases of pressure. And so it may not be that what we see is an extended, another long period of war in which there's airstrikes and ground invasions, but instead phases of these. And then the Israelis will then re-up their demands, the central one being that Hamas has to give up power in the Gaza Strip to see if they can restart negotiations and find a final settlement that is in Israel's favor.
You mentioned the word negotiation there. I just want to bring you some lines that we got from the Israeli Defense Minister, Israel Katz, and he said that they will not stop fighting until all Gaza hostages are freed. So the thinking, at least from what we can glean in the last couple of hours, is that Israel do not think that Hamas will free up the hostages unless they are under duress. How likely is it that this objective actually is achievable?
I don't think it's terribly likely. Hamas has shown a remarkable resiliency in the course of this campaign and has been able to shield most of the hostages from very intense Israeli military pressure. So I suspect that at least in the near term, for the next few weeks, Hamas will attempt to absorb this military pressure and hold on to those hostages as the last bits of leverage that they still have over the Israelis. And, it's important to note that Hamas's vast rocket arsenal has been exhausted. They really can't strike the Israeli cities like they used to. So in terms of leverage, these hostages are it. And I think that they will hold on to them as long as they can.
Yeah, what conditions do you think Hamas would be looking for then in order to transition from phase 1 to phase 2?
Well, Hamas was very clear about that. What they wanted was the phase 2's original details, which is that the Israelis would steadily withdraw from the Strip, a few exceptions being made here and there for buffer zones, and then the corridor, the Philadelphia corridor along the Egyptian border. And then that would then lead to phase 3 that would see the Israelis exit the Strip entirely. It's really been the Israelis who want to rewrite the deal. And what they want is to have a phase 2 in which Hamas is also on their way out of the Strip. And this is obviously unacceptable to Hamas right now. And Israel believes that through resumed military pressure and the unity between the United States and Israel on this position will be strong enough pressure to eventually force Hamas into some sort of exit from Gaza.
Yeah, and at the same time, the Trump administration has been talking about the ultimate reconstruction of Gaza, the Riviera, whatever he called it at the time. But then also you had Arab leaders meet together for an Arab summit to talk about the eventual reconstruction plans as well. Is that just all a little bit too soon, given that the situation on the ground is still as bad as it is?
Yes, the prime agent of driving events there are the Israelis. And as long as the Israelis believe that Hamas must exit Gaza, as long as that is a war objective, all reconstruction plans are too premature. It almost doesn't matter what anybody promises at this moment, because war is the outcome of that demand until at one point either the conditions within the Gaza Strip get so extreme that Hamas decides to exit, or Hamas has been devastated militarily and the population has been, as President Trump has suggested, moved elsewhere to the point where there more or less isn't a Gaza Strip anymore.
Yeah, and it's not just Gaza where the situation has deteriorated. There were U.S. airstrikes on Houthi assets over the course of the weekend. What message do you think the Trump administration is sending to the Houthi militants?
I think they're sending a few messages. The first is rhetorical. They're trying to signal that they're stronger than the previous administration under Joe Biden, and that they're more likely to respond harshly to provocations, even rhetorical provocations, because after all, the Houthis had not begun enforcing their new blockade that they had declared just a few days ago. The Trump administration was willing to strike them just for the mere threat of it. So there's a rhetorical element to this, but there's also an element of aiming towards Iran, which is trying to, the Trump administration is trying to show to Iran that your proxies and your allies are not enough to deter us from military action. We'll take on difficult campaigns like in Yemen, and that these campaigns could come back to haunt Tehran if it continues its own foreign policies and, of course, its nuclear program.
And of course, the Trump administration did deliver a letter to Iran via a UAE diplomat. What do you think President Trump is trying to get to? We know that he likes to procure deals. He's obviously got other things, other priorities for now with Ukraine, with Russia, with Gaza. But ultimately, what does the contour of a deal with Iran look like?
Well, there's the realistic version, and then there's the Trumpian version. And we can start with the Trumpian version, which is that it would be a wholesale rewriting of Iran's foreign and military policies. It would mean the end of Iran's support for its proxies, the end of its ballistic missiles that are used to threaten its neighbors, and the end of its nuclear program that could eventually be used to develop a nuclear bomb. Those are, at least two of those are more or less non-starters for the Iranians. And it's important to note the Iranians still haven't made that decision to develop a nuclear weapon. We've been waiting some 13, 14 years for that day to happen. And so the Iranians are willing to negotiate on the nuclear program. And that's where the realistic deal could come out of it. But the problem is complete lack of trust. After all, the Americans did sign the JCPOA, the Iran nuclear deal in 2015. And this very president pulled out of it in 2018. And so they don't believe that anything that comes out of this White House will necessarily be something that they adhere to, so long as the White House is pushing for this maximalist goal to more or less rewrite all of Iran's geopolitical behavior.
Yeah, and I believe the Ayatollah himself said he thought that those discussions were a trap. So as you say, it underscores the lack of trust between the two sides. Ryan, great to have you on today. Ryan Bohl, Senior Middle East and North Africa Analyst at RANE. Thank you. Well, it's reported that EU members have pledged a total of 5.8 billion euros in extra loans and grants for Syria. European Commission President Ursula von der Leyen told a one-day meeting in Brussels that Syrians need greater support, whether they are still abroad or they decide to go home. The EU has already lifted sanctions on key industries such as energy and transport. Coming up, Kenya seeks a new funding program from the IMF, foregoing an $800 million in review. Details of how the government is looking to shore up its budget financing gap next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jomana Versace in Dubai. Kenya has requested a new funding program from the IMF after deciding not to proceed with a final review of its existing facility. The current $3.6 billion four-year program ends on April the 1st, and the expiry without the final disbursement will leave Kenya with a budget financing gap. Bloomberg's Andira Ganga joins us now. First of all, Andira, why did Kenya decide not to proceed with the current IMF program?
Hi, Jomana. So one can argue that Kenya was already struggling to meet the targets that were set out by the IMF under this program. If you look at revenue, there are shortfalls. Kenya Revenue Authority was already struggling to meet its targets, despite the fact that President William Ruto had introduced new taxes to ramp up revenue collection mechanisms. If you also look at this, the revenue was shrinking, but government spending was growing, and hence the government had to borrow and borrow and borrow some more. And if we go back to when Kenya went to the IMF for this $3.6 billion program, it was determined that Kenya had a debt problem. And so the program became a revenue program. They had to raise revenue locally, and this meant new taxes. We saw the housing levy last year. We saw taxes on basic goods like bread and sanitary towels. And this was a tipping point for very many Kenyans. We saw deadly protests on the 25th of June, and this led to fatalities, 60 people dead. There was a cabinet reshuffle, withdrawal of these taxes. But there's still growing discontentment in the country. President William Ruto has very little wiggle room to introduce new taxes to raise revenue. And so if you look at it, the country had two options: either extend this program and maintain the same targets that they were struggling to meet, or ask for a new program with the hope of negotiating for new targets under the social, political, and economic status of the country. But this meant that they also forfeited $800 million, and this leaves a big gap in government spending and also their budgets.
Yeah, I mean, it just sounds to me that there is going to be a lot of pressure on this government to come up with new revenue-raising measures that don't upset the general public. It's a really difficult set of circumstances to straddle. What options do they have to raise revenue?
Jomana, you're absolutely correct in saying that they are stuck between a rock and a hard place. Whatever choice they make, there will be consequences. They can look externally. They're in talks with the UAE for a $1.5 billion loan to try and plug into the budget holes that they have. But then again, IMF has raised concerns about borrowing at really high interest rates. It adds pressure to Kenya's mounting debt problem, and eventually it will raise problems with debt sustainability. Kenya could also look domestically, borrow from the domestic markets, but then they're in competition with the private sector. And we are seeing that the markets are beginning to react to this. Their yields on their 2031 Eurobond rose. The shilling is the weakest it has been in 3 months. And investors are nervous. What they want is for Kenya to lock a cheap IMF program in instead of relying on the markets and bilateral lenders who come with very high interest rates. In terms of raising revenue domestically, there's very little they can do because the situation in the country right now is very tense and volatility is just one step away.
Yeah, austerity is never palatable for the public. Bloomberg's Andiro Ganga, thank you so much. Now, the rebel group behind the recent violence in the Eastern Democratic Republic of Congo has pulled out of peace talks a day before they were due to start in Angola. The Rwanda-backed M23's decision follows EU sanctions announced yesterday, with the spokesman saying they severely undermine dialogue and make any progress impossible. Today's talks would have marked the first meeting between the Congolese government and the rebels. Nigeria's annual inflation has eased for a second straight month, stoking optimism that price pressures have peaked. Annual consumer prices rose 23.2% in February, down from 24.5% a month earlier. Cooling inflation could encourage Nigeria's central bank to hold its benchmark rate again. This after a series of hikes aimed at curbing price pressures took the rate to 27.5%. And coming up, investors look to the UAE as they hedge against tariffs and the trade war. We get more details on the appeal of the Emirates next. This is Bloomberg.
Well, on a country-by-country basis, I mean, the biggest impacts that we see are in Mexico and in Canada, for obvious reasons. But if I just go back, I mean, at a global level, we are downgrading our growth outlook for this year by 0.2% down to 3.1%, and next year by 0.3% down to 3%. And I mean, it's a function of the data pointing to a weakening in the global economic outlook, but also inflation remaining more elevated than we had previously anticipated.
That was the OECD Secretary General speaking to us after cutting global growth forecasts. The OECD says President Trump's aggressive trade policies have abruptly set the global economy on a path of slower growth and higher inflation. And as the world grapples with tariffs, one company is suggesting Middle East investors look closer to home. 91's equity team favors buying UAE stocks as it seeks markets uncorrelated to Trump's trade war. Joining us now is Bloomberg's senior editor, Srinivasan Shivabalan. Really good to have you with us on the show. I think people may be surprised to hear that the UAE, or at least investing in the UAE, is a safe haven of some sorts, especially in a world of growing geopolitical risk, but also the threat of tariffs as well. What has been the allure for some of the investors looking to get or increase their exposure to UAE markets?
Absolutely. Thanks for having me, first of all. What's really happening now is that three things are happening globally. Apparently, U.S. exceptionalism is ending. That is forcing investors to look out for markets that they can invest in new opportunities. And Trump's tariffs have created a sense of urgency to look for markets that are not dependent on the U.S. For their internal growth story, for their domestic growth story. And there aren't very many stories around the world. And investors are increasingly landing in the UAE because there is an economic growth happening here led by immigrants. And the currency is stable because of a peg, and it is not beholden to the dollar's moves. And it is likely to be not a target of Trump's, tariff threats because the UAE does not depend on the U.S. for a lot of its exports. In fact, the U.S. has a large trade surplus with the UAE, so it is unlikely to be a target. And the UAE having its own story, which is completely independent of what's happening outside, is attracting investors. 91 is the latest in a series of investors saying that UAE can be an escape trade of sorts from Trump's tariffs. And the emerging markets as a whole are doing much better now. But UAE in particular is attracting. It's not showing in the performance yet, but investors are coming in large numbers.
I suppose it's a way of also getting access to dollar-denominated assets that aren't in the U.S. because of the currency peg. What about liquidity and depth in these markets?
Yes, the UAE is a $1 trillion market, so there is a sufficient size of opportunity. Scale of ambition is comparable to some of the large markets in the world. But where the opportunity lies is, so far the low-hanging fruits have been tapped in terms of the massive rallies in real estate and other rallies that we have seen in this market. But now it is all about reform and opening up, and a lot of companies are owned by the royal family here. How much of minority shareholders can play in these stock markets, and it is progressively changing, right? There are reforms every month changing the market structure. Technology is being upgraded. Abu Dhabi just implemented a system where the trading speed increased by 400%. They are working with NASDAQ on that. So changes are happening every day. So that means that going forward, this market is going to be bigger and more open to foreign investors.
I'm sure it's music to their ears. Bloomberg senior editor Srinivasan Shivabalan, great to have you with us on the show.
Thank you.
Now, Telegram's billionaire founder and chief executive is back in Dubai after France temporarily loosened the conditions on him as part of a criminal probe into the messaging app. Pavel Durov, who is a UAE citizen, denies the charges which relate to crimes committed by users on Telegram. And a look at equity futures today. We have red for Wall Street, so S&P, NASDAQ, Dow all seen opening up in the red, so NASDAQ leading the losses this morning. But Euro Stoxx futures tilting towards the green, up 0.3% ahead of that important Bundestag vote later today on the German fiscal package. Would also just point out over here in the region, we are seeing a bit of an uptick in the price of oil and more money flowing into the safe haven gold on back of the flaring up of geopolitical tensions and the airstrikes in Gaza. But coming up in the next hour, Christiaan Tuntono, the senior Asia-Pacific economist at Allianz Global Investors, joins us from Hong Kong. I'm Jumana Versace in Dubai. Stay with us as Jennifer Zabazaja joins me from Johannesburg. This is Bloomberg. Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Israel launches multiple airstrikes across Gaza overnight, shattering the ceasefire that paused 15 months of fighting. The Hamas-run health ministry says at least 200 people have been killed. Asian stocks gain for a third day as investors ramp up bets on China's tech companies. BYD soaring to a record after launching new EVs with ultra-fast charging. And gold hits an all-time high as geopolitical risks mount. Plus, President Trump says the U.S. and Russia are already in talks about dividing Ukrainian assets. He speaks with President Putin later today. Well, good morning again, everybody. It's just gone 9 a.m. across the Emirates. I'm Jumana Versace in Dubai.
And I'm Jennifer Zabasaja in Johannesburg, where it's just gone past 7 a.m. Welcome to the second hour of Horizon's Middle East and Africa. And Jumana, many people are waiting for that call between Putin and Trump. But also, as you were just mentioning there, geopolitical tensions really making a lot of impact in terms of commodities, especially when it comes to gold and the price that we're seeing there.
Yeah, and keeping a close eye on the developments over here and in the Middle East with the latest Israeli airstrikes on Gaza. That death toll continues to mount. So as you say, some money is pouring into the safe havens today, Jen. It's having an impact on Wall Street indices. Both U.S. futures, S&P futures and NASDAQ futures are leaning towards the red this morning after a better close yesterday, down about 0.3% respectively. Euro Stoxx futures, we are seeing a bit of optimism as we get into the German German fiscal package vote later this afternoon. So that's going to be a big focus for anyone invested in Europe. And of course, has been the talk of the town the last few weeks. And then the Asia Pacific index today, the handover pretty positive as well, up 0.9% as we talk about those Chinese tech stocks doing quite well, specifically BYD. That was one of the names that we were speaking about earlier on in the show, having a very good start to the day on the release of their latest EV. Switching over, though, I just want to point out some of the price action that we're getting in typical safe havens. So money is going into the USD today, albeit a little bit. So we're up about 0.1%, bucking the recent weakness as of late. We have 10-year yields, treasuries now back to flat, but at one point we were about 2 basis points lower, still sitting just shy of 4.3%. And don't forget, this week is a big week for interest rates with that Fed decision tomorrow coming up. All eyes will be on the language vis-a-vis the U.S. economy and also what the dot projections are. So keep an eye on that for the remainder of this week. Gold money keeps going in to the safe haven there. It's up 0.5%, all-time record high. So we are firmly through $3,000 now. And then Brent also trading above $71 this morning, so slightly higher, up about 0.25%. Let's also check in on how markets in Asia are faring. Avril Hong is in our Singapore studio. Avril, walk us through the price action today.
Yeah, Jumana, we're seeing Asia stocks running higher for a third session, and it's being lifted, as you say, by those Chinese tech stocks. We're back from the lunch break in Hong Kong, and tech is mostly holding on to the gains of the morning session. So I thought I'd just highlight what we're seeing in Japan, because tomorrow, after all, is BOJ Day. Today, we're seeing the trading houses doing well, as Buffett has boosted his stake in them. And then we also have the banks supported by higher yields. All of this relates to the path of the BOJ, of course, and we're going to be watching out for Ueda-san's presser, whether he signals anything about when the next rate hike is going to be, or what could potentially derail this, potentially tariff risks. For the moment, that seems to be weighing on the yen, along with some of these domestic political risks. We're seeing the Prime Minister Ishiba's popularity falling after it emerged that he distributed shopping vouchers to a number of lawmakers. So that, for the moment, is some of the drivers we're seeing in the Asia Pacific.
Thanks so much, Avril Hong in Singapore. Avril, we'll check back in with you in just a bit. But let's go back to our top story. Israel says it won't stop fighting until all Gaza hostages are freed after launching a series of military strikes on Hamas targets. Gaza's health ministry says at least 200 people have been killed in the fiercest bombardment since phase 1 of the ceasefire deal expired. The White House says the Trump administration was consulted ahead of the attacks. Joining us now is Bloomberg's Dan Williams from Jerusalem. So, Dan, talk to us about this escalation and really what this means for potential ceasefire talks in this conflict.
Good morning. Well, there was no ceasefire, so really this resumption of fighting was just a matter of time. There may be an element of tactical surprise here. Indeed, Israeli public opinion was largely diverted in recent hours by internal discussions about the fate of Israel's Shin Bet security chief, his termination. It could be that that discussion was actually meant to provide a smokescreen for the resumption of these Israeli attacks. But nonetheless, given that the last agreed ceasefire expired 17 days ago, a resumption of fighting was to be expected. Israel, with the backing of the United States, accused Hamas of not cooperating on talks to extend the ceasefire, to come up with a new ceasefire, talks that would have retrieved more of the remaining hostages in the Gaza Strip. So now it appears Israel is resuming warfare, albeit it would appear standoff strikes at the moment, airstrikes, perhaps artillery. The big question is when and if Israeli troops will be sent back into population centers in the Gaza Strip. That will be another element of escalation here.
And Dan, we were hearing from President Trump. He was escalating the rhetoric, really saying that all hell would break loose. What potentially could the U.S. insert to make an impact in the trajectory of this conflict right now?
Well, I think we've already seen the last 3 days with this surprise U.S. campaign against the Houthis in Yemen, it would appear that Hamas's one active foreign ally has actually been blunted, has been tamed, if you like, by U.S. firepower. The Houthis were the one party in the region that said explicitly that they were willing to pitch in one more time to back up Hamas, to back up Gaza against Israel over the last 2 weeks. It would appear now they won't be able to do that anytime soon as they're preoccupied with the U.S. campaign. So even though this hasn't been stated explicitly, there has been peripheral operational support by the United States. And since you mentioned President Trump, you'll remember that he threatened to open the gates of hell on Hamas over the hostages. Remarkably and possibly not accidentally, the Israeli Defense Minister Katz repeated that very metaphor, warning Hamas just an hour ago that if they don't deliver on the hostages, the gates of hell will indeed be opened up upon them. So on a rhetorical level, the allies are in lockstep. It would appear operationally as well.
Concerning situation there. Bloomberg's Dan Williams in Jerusalem starting us off. Dan, thanks so much.
President Trump is set to speak with his Russian counterpart Vladimir Putin today amid a U.S. push for a ceasefire with Ukraine. The two nations are already discussing how to divide assets in Ukraine, sparking concerns that Trump may sacrifice Kyiv's interests in a deal with Putin. Now, speaking on Monday night, the president called it a bad situation.
Tomorrow I'm speaking with President Putin of Russia to save some soldiers who are in deep trouble. They're captured. Essentially, they're surrounded by Russian soldiers. I believe if it wasn't for me, they wouldn't be here any longer. I was able to get them not to do anything at this moment. But it's a bad situation in Russia, and it's a bad situation in Ukraine.
For more on this, we're joined by Greg Sullivan, our Russia economy and government editor. So all eyes on this phone call that's going to take place later today between President Trump and President Putin. President Trump has previewed it by saying that they've already discussed a potential division of Ukrainian assets. What assets do we think he's referring to?
Well, Trump himself mentioned a few things which might signal what he's actually talking about. One was land. Now, land has been both sides have had red lines concerning the land that's been occupied by either side at various points. Of course, Moscow does not want to give up the gains that it has made, the territory that it has acquired. It is seeking to annex 4 territories. And Ukraine, as well, earlier said that it did not want to cede its sovereignty over that territory, though it has walked that back a little bit. Another thing that President Trump mentioned were power plants. Right now, Russia occupies the Zaporizhzhia nuclear power plant. It's the biggest in Europe. It has occupied it since the beginning of the war. That could also be one of the assets that President Trump is referring to.
Yeah, some commentators out there have referred to the fact that Putin keeps putting forward these conditions that he knows would not be acceptable to Ukraine in a bid to buy time. Do we think that all of these discussions and the back and forth is just part and parcel of Putin looking to buy more time so as to gain more ground on the battlefield?
Certainly that's what analysts seem to calculate right now. It's not necessarily in Putin's interest to come to a quick ceasefire deal. And in fact, Russia has ruled out a temporary truce if there's no progress towards what they say needs to be a long-term solution. A lot of the conditions that he has put forward are simply unpalatable to Kyiv. And will be very hard for them to accept if they do. Most people calculate that the Russians can continue to fight. It's potentially strengthening their hand at the bargaining table, so there's not as much incentive for a quick truce. So very much that could be a play for time.
And where does this leave Ukraine? Because the big announcement last week was that Ukraine had in principle signed up to this 30-day truce proposal put forward by the U.S. But then if U.S. take that proposal but then redefine it once again with Russia, what Ukraine thinks that they have signed up to is not necessarily what the final deal is going to look like.
Well, it's certainly a tough place for Ukraine. They've faced a lot more pressure from the White House than the Russian side, and many allies in Europe are worried that in Trump's race for a deal, he will want to stop the fighting at any cost, including by conceding more on behalf of Ukraine than Ukraine is willing to. So it's a very tough situation, and a lot of European allies are very concerned about that very fact.
And what are we hearing specifically from European allies? Yesterday we were talking about potential peacekeeping troops being supplied from UK and France. How likely is that to still happen in light of the discussions that are taking place without Europe being present?
Well, that's a great question. Security guarantees are going to have to be part of any final negotiation, and it's not clear what the two sides can agree on. As you said, Europe is working to put together a potential peacekeeping force, but Russia has categorically ruled out the presence of NATO troops on Ukraine's territory. So that remains a huge question mark, even if Europe is making steps towards providing that force.
Greg, thank you so much for giving us the latest. Greg Sullivan, our Russia economy and government editor, a preview into that all-important phone call later today between President Trump and President Putin. Now, President Trump says Chinese leader Xi Jinping will visit Washington in the not-too-distant future without giving an exact time frame. Discussions between the two countries on trade and other issues are said to be stuck at lower levels, with both sides deadlocked on how to proceed. Trump has said he is open to reaching a fresh deal with China, even as he intensifies pressure on Beijing. And still ahead, we get the macroeconomic outlook with Allianz Global Investors as traders brace for monetary policy decisions while weighing geopolitical tensions. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Persechi in Dubai. Asian stocks are tracking a rebound in the S&P 500, while U.S. equity futures are slipping in Asian trading. Oil prices, meanwhile, rising for a third day due to escalating Middle East tensions. Joining us now is Christiaan Tuntono, Senior Asia-Pacific Economist at Allianz Global Investors. Really good to have you with us on the show. One of the big themes from a market's perspective this year has been the outperformance of Chinese equities versus U.S. equities. I just wonder, in light of the news that has come out, in light of the uncertainty surrounding tariffs, the potential upcoming meeting between Trump and Xi, whether you think that this outperformance may be set to continue.
Yeah, I think so. If you pay attention to what's going on in the U.S. and China lately, you can see a clear difference in terms of, I'll say, policy predictability. I think in the U.S., there are a lot of tariffs that's imposed by Trump, and sometimes these decisions are being reversed in short notice. And then we see some of the deportation going on for illegal migrants, and also some of the abrupt firing of federal workers. I think all this are shaking the sentiment in the U.S. market. And we also saw that the U.S. consumer confidence indicators really actually plummeted and causing concern over the outlook of growth and inflation in the U.S., right? At the same time, right, in China, Xi Jinping has made a U-turn in terms of the policy stances towards more pro-growth, right? To speak with the tech entrepreneurs are sending a very positive message to the economy. And we also see some significant technological breakthroughs from technologies company. And the latest government work report from the State Council also shows an expansionary fiscal policy. So if you compare the two, you can really see that the policy drivings or the directions of travels are different in these two economies. And that may explain the difference in the equity market performance that you mentioned.
Yeah, that's so interesting. What about for the broader Asia region? What is going to be a more impactful driver of how these Asian economies do? Is it going to be the follow-through on the fiscal spending from China, or is it going to be the U.S. economy slowing down and the ramifications that might have on global growth?
Yeah, I think both are actually important factors that you point out too. But I would speak more on the implications for the U.S. first, right? If the U.S. Growth concerns really rises and market expectations for Fed policy rate cuts really rises to around 3 cuts as it currently priced, then that would actually open up in the easing room for Asian central banks. And we know that there's a couple of economies in the regions that actually has very high nominal policy rates level. And as their inflations actually stay moderate, there is a room for cutting the nominal rates so as to lower the real policy rates, right? I would say the weakening of the U.S. growth outlook really is enabling such kind of policy rate cuts that would actually help to support domestic demand of the Asian economies. And these are needed in the face of rising trade turbulence that I will foresee as Trump's intensify the global trade war against many economies across the world.
And yet, Christiaan, you believe the BOJ will continue to keep its monetary policy unchanged. What then will you be looking for when it comes to the telegraphing from the Bank of Japan governor?
Yeah, we think the Bank of Japan probably going to stay put for this month, but actually, in my opinion, policy rate normalization in Japan is still ongoing. It is just that because of the rise of uncertainty in the external trade front that probably prompt the BOJ to be more cautious in the pace of policy rate normalization. So we'll watch what Governor Ueda going to send a message, right, and to pick up from his words, whether he'll be more turning a little bit more dovish because of the growth uncertainty, or he actually thinks that growth could be okay. And in the view of rising inflation pressure in Japan, whether it would justify another policy rate hike and what would be the potential timing for that to come.
And Christiaan, just finally, when it comes to the trajectory for Asian currencies, we are seeing a weaker dollar. How much of what we're seeing right now and what a lot of these meetings that we're waiting for this week, how could they affect potentially your stance and your bullishness on some of the currencies in the region?
Yeah, I would say in the beginning of the year, I was not that positive on the Asian currencies. At that time, market was concerning about the impact of Trump's tariffs on Asia trade, and also market was more single-focusedly on the inflation implication from the Trump tariffs on the U.S. economy. But I think over this past a month and a half, market is becoming more concerned about the downside risk on U.S. growth because of Trump's policy on trades and many others area. So weakening growth outlook for U.S., right, really increased the Fed policy rate cut expectations, and that's the reasons that is supporting the Asian currency at that time. So I think as long as the market narrative is still on, as it currently Asian currencies like to be supported. But if in the event that actually the impact of trade war really kicks in, or market has a hawkish turn on Fed policy outlook, then I think the reverse is likely to happen.
Christiaan Tuntono, Senior Economist for Asia Pacific at Allianz Global Investors. Great to get your insights on. Thanks so much for joining us. Now, coming up, MTN's plans to move into Sudan and Nigeria. We hear from the CEO of one of South Africa's largest mobile network providers. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. MTN plans to spin off its fintech operations in 3 key markets during the first half of the year. That's as part of a reorganization which will allow MasterCard to buy a minority stake in the high-growth units. Africa's largest wireless carrier posted a record loss as a result of the struggling Nigerian naira and the conflict in Sudan.
Inflation in Sudan is like 300%. And that's been driven by the ongoing conflict, the war situation that's there. It's a very unfortunate humanitarian set of circumstances. We have, however, been able to get our network back on air in certain regions. And more recently, we've been able to get some of our sites back on air in Khartoum, which used to be 70%. So, the situation is still concerning, because of the humanitarian impact. We're trying to keep our networks on to, help citizens, get through. But it's a situation that we continue to monitor. So unlike Nigeria, where, looking forward, we're a lot clearer and a lot more excited about the prospects for Nigeria. Sudan continues to be something that, occupies our minds. No decision made just yet about, how much more of this we can actually work through as MTN.
Yeah, so have you thought about potentially exiting if this continues on the way that it is for the company?
Look, I mean, an exit is often seen as like the easy thing, but the moment you exit, or if you take an exit decision, it means that your customers who rely on your network to be able to talk to loved ones, and for those who are doing business to continue with commercial operations, that has its own effects. And as I said, what has been encouraging is that in several key regions, including in the near term, or more recently, Khartoum, is that we're actually able to go and fix our network there and get some of our sites back on air and enabling people to communicate. So we always assess, we'll continue to assess the situation. Obviously, we would like the conflict there, to come to an end and, continue with normal operations. But for now, we are just assessing the situation. And if it gets better, then that's great. If not, then, we'll have to apply our minds.
That was MTN CEO Ralph Mutina speaking with us. And you can catch more of this exclusive interview on our monthly special that's Next Africa, and it's out on March 28th. Let's take a quick check at markets, though, and where they're positioned ahead of the trading day. Right now, if we take a look at equity futures, at least in the U.S., pulling back slightly from a second day of gains that was on Monday. We did see a broad-based rally across the board for U.S. shares, but S&P futures down just over 0.3%. Eurostock 50 futures, though, looking like potentially it will be a stronger start to the day, but we'll wait to see how that pans out. Coming up, at least 235 people have died in Gaza after Israeli strikes on Hamas targets. We discuss the details next. This is Bloomberg. This is Horizons Middle East and Africa. Our top stories this morning. Israel launches multiple airstrikes across Gaza overnight, shattering the ceasefire that paused 15 months of fighting. The Hamas-run health ministry says at least 235 people have been killed. Asian stocks gain for a third day as investors ramp up bets on China's tech companies. BYD soaring to a record after launching new EVs with ultra-fast charging. Gold hits an all-time high as geopolitical risks mount. Plus, President Trump says the U.S. and Russia are already in talks about dividing Ukrainian assets. He speaks with President Putin later today. It's just gone past 7:30 a.m. in South Africa. I'm Jennifer Zabasaja in Johannesburg.
And I'm Shimona Bersetchi in Dubai, where it's just gone 9:30 a.m. Welcome to Horizons Middle East and Africa. Again, so much on the agenda. We have previewed that upcoming call between President Trump and President Putin. But over here in the Middle East region, we're keeping a close eye, Jen, on the developments in Gaza with the resumption of Israeli airstrikes onto the Strip. Once again, the death toll continues to mount. And we are seeing some geopolitical risk premium come back into markets once more.
Yeah, certainly feeding into a number of commodities, at least this morning. Jumana, let's just take a look at where markets are positioned ahead of the trading day. You mentioned a lot for investors to parse through at this point in time. If we just take a look at U.S. equity futures, pulling back down nearly 0.4%, S&P futures there right now. After we did see indices climbing for a second day on Monday, there was a broad-based rally for U.S. shares closing in the green. And yet that is coming after quite a few turbulent sessions, of course, as we know. Part of the rally, though, was fueled by retail sales data that we did get, potentially easing some of the concerns around a U.S. recession. We're also paying close attention to euro dollar right now, still in focus ahead of that critical vote that's coming from the German parliament on a debt finance spending plan that's coming later today. The euro dollar right now at 1.09. We are seeing Bloomberg's gauge, though, of the dollar rising for the first time in 3 days. So close attention will be paid to currencies, certainly. We did mention to Monday we did get a broad-based rally, at least in the U.S. That also helping to lift emerging market equities. The retail sales data, also the China stimulus that we did get. Right now, the gauge for EM equities up nearly just over 0.9% there. And we're waiting to see whether or not or how that pans out, of course, when it comes to Fed rate cuts and how that could potentially affect EM more broadly. And finally, Jumana was mentioning we're watching the developments geopolitically geopolitically in the Middle East. Brent crude right now up nearly 0.4% there, trading around $71.34 a barrel. That also coming from those revived tensions in the Middle East, but also China stimulus potentially helping to prop up some more demand. And really quick check on our terminal chart. The equity rally, as this chart is showing, potentially we call it a breath of fresh air, if you can see what we did there. I will not take credit for that, though. Just a few days ago, we were, though, talking about a lot of the indices, many of the indices in the U.S. being in correction territory, though we have seen the three major indices are still down on the year, but the S&P has made up some notable ground, as you could see, closing in the green on Monday, though is futures right now looking a little bit weaker on the day. Let's just check in, though, on how markets in Asia are faring. Avril Hong is in Singapore, in our Singapore studio with more. Avril, what are you watching?
Well, Jen, it's really this watch on a tale of two markets, China on one hand and Indonesia on the other. Now, Chinese stocks are doing well today. It's a combination of factors, tech earnings optimism, the consumption plan, and then these AI developments from the likes of Baidu, Alibaba, BYD with its battery charging system. So that's what's fueling these stocks in Hong Kong particularly. And this chart, courtesy of MLife's Mark Cranfield, gives you a bit more context on where we go from here. If you look back to the September surge, and this is, of course, following on from the stimulus blitz, the open interest positioning at that time was really crowded. We're not quite seeing that this time around, which suggests that ETH earnings actually deliver this week. There's more in the tank when it comes to the Hang Seng. There's more room to run higher. Flip the board. When it comes to the Indonesian stock benchmark, though, that's the market that today experienced a trading halt and then sinking even further, I think almost 7% down at one point. Some of this economic woes weighing and the concerns about weak consumer spending ahead of the Eid holiday. Bank Indonesia meets tomorrow. Only a handful of economists actually see a cut. But I think what we're seeing in the markets there today is really a form of panic selling, which also quite reflects what we saw in the early days of the pandemic. So really different paths for these two emerging markets.
Avril, thank you so much. Avril Hong in Singapore. Back to our top story this morning. Israel says it won't stop fighting until all Gaza hostages are freed after launching a series of military strikes on Hamas targets. Gaza's health ministry says at least 235 people have been killed in the fiercest bombardment since phase 1 of the ceasefire deal expired. The White House says the Trump administration was consulted ahead of the attacks. Now, joining us now is Dana Khresh, Bloomberg's UAE bureau chief. Walk us through the developments in the last 24 hours, because this is quite the flaring up of conflict once again.
Yes, I think this is indeed like when we know that the ceasefire has completely collapsed. Israel is saying it will strike Hamas until all hostages are released. It's going to be relentless. It's going to probably expand. So this is back to square one in Gaza, especially for the thousands of Palestinians who return to whatever is left of their homes. This is, of course, still during the month of Ramadan as well. And last week, Israel did cut off the power supply. They said they're going to block humanitarian aid. All this to pressure Hamas to agree to Israel's terms. Now, Hamas is saying this is not our fault, and Israel is now going back on the ceasefire terms. And Israel and Hamas didn't really agree to anything after the ceasefire expired 2 weeks ago. Hamas wants a complete withdrawal of Israeli troops from Gaza. That way they would give back the hostages. Israel cannot agree to this. The main war goal for Israel is to root out and destroy Hamas completely. And withdrawing without that is not an option. It seems it isn't an option for it right now. So we're seeing the attacks at full scale, even fuller than we expected today as well. There are reports of at least 230 Palestinians killed in these airstrikes since a couple of hours ago. So this is now a full-fledged, probably, resumption of hostilities.
Is there any hope for a revival of those ceasefire discussions? And high-level mediators were meeting in Doha just a couple of days ago. What hope is there now to restart those discussions now that perhaps Hamas are under duress?
It's difficult to say. Hamas has been under duress for a year and a half now. Those relentless airstrikes, they've killed Haniyeh in Tehran. They also killed Sinwar. So they have been decapitated, and they've been under pressure. They've been under these attacks. Now, Israel said that Hamas rejected the so-called bridging proposal that Witkoff came to the region with. And they said they rejected a proposal by Egypt and Qatar. So there is no way to think that anything would happen now. I think what we need to see is more efforts by the mediators. Is Witkoff coming back to the region? Are they going to resume talks, or this is the end of it all? And what Israel's position is now that they are 100% backed by the U.S. We saw yesterday the U.S. saying that we support what Israel is doing. And now this is not looking good in the region as a whole. The prospect now is very gloomy. Israel intensified strikes in Lebanon. They've been hitting Syria. And this is kind of, we're back to square one as we see the U.S. also targeting the Houthis. The Houthis are targeting also the that U.S. ship in the Red Sea, and they said we've attacked it 3 times in the past 48 hours. No one is backing down at the moment in the region.
Dana, thank you very much. Bloomberg's UAE Bureau Chief, Dana Khresh.
Now let's get more on a Bloomberg story on how a key ingredient in Coke and Pepsi production is tied into Sudan's genocidal civil war. 70% of the world's supply of gum arabic, which acts as an emulsifier in popular household brands, is produced in the country. Joining us is Bloomberg's Simon Marks from Nairobi, who has dug into this for quite some time. Simon, thanks so much for joining us. Talk to us first about gum arabic and the significance of it for the food and beverage industry globally.
Yeah, hello. Well, gum arabic, it's one of these sort of hidden ingredients in so much of what we consume. It really is ubiquitous in food, beverages, pharmaceuticals, cosmetics. And essentially, it sort of binds ingredients together. So whether it's giving it that sort of smooth texture that you have in your toothpaste, having your lipstick be applied to your lips in the correct way, or in the case of Coca-Cola and fizzy drinks, it binds that syrupy base mixture to the other liquid and stops it all from falling to the bottom. So that's why it's so key. It's organic. It's grown from acacia trees all across this belt that stretches from east to west in Africa, in dry areas. And it's essentially the sap that comes out of the tree, harvested by local producers and then sent onwards to larger processing companies. But it really is a cornerstone of so much of what we consume.
Which makes the impact that potentially these companies are having from the conflict in Sudan potentially that much more significant. Can you just talk about what the connections are that you found, especially considering the conflict has been going on for so long?
Yes, so I mean, through months of digging into this subject, we found that essentially in Sudan, which produces most of this stuff, there's a handful of local processing companies that take gum arabic, process it in a rudimentary way, try to separate the big bits from the smaller bits, and then sell it to another handful of companies, mainly in Europe, who then export this to all the big brands, the big companies, some of which I've just mentioned, be it Coke, be it M&M, be it Mars, be it companies in the cosmetics area, and we've sort of seen that these processors at the heart of the production in Sudan are paying very often extortion, tax, ransom money to the rapid support forces in Sudan, where most of these acacia trees, where the gum arabic is produced, are growing. And so the supply chain is tarnished, essentially, the whole way through.
Bloomberg's Simon Marks in Nairobi has dug into this for quite some time. Simon, appreciate you joining us for sharing your reporting. Thanks so much. Now, coming up, Bloomberg understands a proposed travel ban by President Trump would mostly impact Middle East carriers operating within Asia. The details on that next. This is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. U.S. President Donald Trump's proposed three-tier travel restrictions are set to target 43 countries, this according to a report by the New York Times. Bloomberg understands the restrictions will mostly impact operations of carriers operating from Asia into the U.S., including Qatar Airways, Emirates, and Turkish Airlines. For more on this, let's bring in Bloomberg's Lina Dashtan. Lin, good to have you with us, albeit to talk about this topic in particular. President Trump may be looking to resurrect what was once known as the travel ban. This time, they're floating the idea of travel restrictions. What do we know, and when could it be implemented? Which countries will be affected?
Our understanding that this could be very imminent. I mean, the security officials that are drafting these list of countries, they're supposed to present it to Trump this week. And the list of countries includes the original countries that were in the first travel ban, so Muslim majority countries. And then some have been added. I mean, the ones that stand out from the second tier, where visa restrictions will be very heavy. Pakistan, Russia, and all of these restrictions on these countries will definitely impact the carriers in the Middle East that usually transfer people from those countries to the U.S.
How important are those routes for those Middle Eastern carriers' bottom lines, though?
This is their bread and butter. It's transferring people. And if you have Pakistan, Russia, Syria that now carriers are traveling to, Qatar Airways just increased their flights to Syria up to 3 daily. So we're talking, this is a lot of business for them. Traveling, bringing people from these countries to the U.S. is a big business for them. The first travel ban caused absolute mayhem for them. Those are the words of President Tim Clark of Emirates. Oh. So this could have some impact on them.
And could it lead to a potential rerouting? Could these airlines try to find traffic from other geographies around the world to compensate?
Yes, so the only thing that could provide cushioning for these carriers is that travel demand is really high.
Yeah.
The hope is that people will still want to travel. Maybe people in the Middle East or other Muslim majority countries, Africa, won't be able to go to the U.S. But then, if that travel demand is still there, these carriers are hoping that they'll travel to Asia, they'll go to other places, and if that demand is high, then they'll just reroute the flights.
Yeah, Lean, thank you so much for the reporting. Bloomberg's Lina Dashtan, thanks so much. And coming up, Saudi Arabia's wealth fund looks to ramp up fundraising efforts to meet the Crown Prince's spending goals. Details of the kingdom's quest for cash next. This is Bloomberg.
German lawmakers are set to approve a debt-financed spending bill on defense and infrastructure, with conservative and social democrat lawmakers signaling overwhelming support. The legislation will exempt defense spending above 1% of GDP from borrowing restrictions and create a special infrastructure fund that can borrow up to 500 billion euros over 12 years. Bloomberg's Oliver Crook is in Berlin and joins us now. Oliver, this is, of course, breaking with tradition for Germany. What are the stakes here for this vote?
Jen, it's hard to overstate the importance of this for Germany, because this is, as you sort of allude to, really breaking a number of taboos within Germany, whether it's sort of massive German rearmament, which is obviously a very sort of controversial issue since the Second World, or basically turning off the debt brake, which is effectively what they're doing. This is a sort of piece of legislation that has been in the German constitution since the financial crisis that basically restricts the volume of debt that the country can take on constitutionally. That is potentially going to change today, and that is going to turn on the taps for a fiscal bazooka that we have not seen in Germany really in any sort of in modern history. What this will entail is basically 500 billion euros in infrastructure spending. So 100 billion of that is going to go to sort of climate-related projects. That is part of the negotiation that we've had over the few days. The Greens had to sort of they got sort of their will through. 100 billion of that is going to go to the states. But where things get very interesting is on the defense spending, because in any defense spending over 1 percentage point of GDP, there is basically no upper limit to what the German state can debt finance. This is going to have absolutely huge consequences for the defense sector, of course, for infrastructure. When you ask sort of economists what impact it could have on the economy, just the infrastructure fund alone could add 2 percentage points to German GDP annually over the next decade. So this is really the big fiscal bazooka, and bigger than really anything that could even come up with right now at the EU level.
And of course, it is key for Germany's chancellor in waiting. What could potentially go wrong, though, for Merz?
Yeah, so listen, there are a number of legal challenges to this because there's a number of ways in which he's gone about this that are not what we would call traditional and actually kind of without precedent in modern times. For example, he is not even chancellor yet, right? And they're using a majority of basically the last mandate of the parliament. This is no longer going to be the sort of composition of the parliament after the vote that we had at the end of February. And basically, they're forcing this through with a majority that they don't really have anymore after this vote. This has upset a number of different people. What we're going to get today, though, is we're going to get the sort of first sort of a test vote at 9 a.m. local time. Then there's going to be a long debate into the afternoon. Then we will get the vote at the Bundestag. Then this goes to the upper house on Friday, and then it will be signed into law potentially by the end of Friday. But again, there are a number of people they're unhappy with, not least of which the AfD, the Alternative for Deutschland, which has filed a number of sort of court complaints. But at the moment, it seems as if this is going to get through. If it does not, however, Jen, and there is still a chance that it could not, this could put his chancellery at stake.
Pivotal few days just starting here. Bloomberg's Oliver Crook in Berlin. Oliver, thanks so much.
And a story that just dropped. Saudi Arabia's wealth fund is set to intensify its fundraising efforts as it grapples with the scale of the kingdom's spending ambitions. The public investment fund will look to tap a broader array of investors and pursue debt sales through its subsidiaries. For more, let's bring in Bloomberg's Matthew Martin, who's in Riyadh and who authored this report. The article just dropped, Matthew. So just walk us through what we learned vis-a-vis PIF spending targets and how they're looking to fundraise to finance some of those spending objectives.
Good morning. Yeah, well, look, the PIF is facing this huge increase in spending. From next year, spending is going to go up to $70 billion a year. Excuse me. And so that's a 40% increase on what it's spending every year at the moment. So it's going to have to go out and tap a lot more sources of cash. So far, what we've seen over the past few years, the PIF has gone out and has borrowed in its own name. We expect that the PIF, from what we're hearing from sources, is they're going to continue to do that, but they're going to look at new avenues of borrowing. So we'll potentially see new currencies tapped, like euro. They've not gone into the euro market before. Perhaps also a so-called 144A deal, which enables you to market directly onshore to U.S. investors. Another thing that they've not done so far. Also, what we're going to see is these portfolio companies that the PIF has been setting up to invest in new sectors is going to be pushing those to go out and borrow themselves a lot more and to take more debt on their balance sheet rather than expecting cash to come in through PIF. But I think the key thing is the PIF doesn't want to give these companies any sort of credit guarantees and support. It wants them to be bankable on their own terms and not rely on these contingent liabilities that would be built up at the PIF, which could become a problem in the future.
Yeah, let's just go back to the fundraising efforts. Is this mostly going to be centered around debt issuance, or are there other things that they can do in terms of perhaps listing some of the businesses they have created to generate cash?
Yeah, well, as you say, we have seen the PIF in the past. It has gone out and it has taken some of the portfolio companies it's created and listed them on the Saudi Stock Exchange. There's a lot of these companies which are growing, which are not yet profitable, so won't be able to. Obviously, NEOM is a long way away from making money, and so you couldn't list an entity like that. But some of the other companies that they're creating, we expect will come out. We've got in the story, we mentioned 3 or 4 companies, including NUPCO, which is a medical procurement company, the Saudi Ports Company. These are both expected to come to the market this year. And we also expect to see the PIF has around $450 billion stakes in companies already listed in Saudi Arabia. So it can look at getting some of those and selling down some of those stakes on the market as a way to raise money in entities like STC, Tadawul, Saudi National Bank. These are all other strings that the PIF can pull to try and raise some money. The challenge with that, of course, is going to be the markets are wobbling at the moment. How much you can really go out and start to, sell more of these companies at a time when valuations are coming down, I think will be a challenge.
Matthew, just very briefly, who are the most important people at PIF leading these fundraising efforts?
Yeah, well, look, I think the two key figures really that people need to be aware of and watch out for is number one, Fahed Al Saif, who is sort of in charge of the corporate finance and strategy group that looks after all of these bond sales by both by the PIF itself and by all of these hundreds of subsidiaries. And then on the equity side, you have ES Al Dusuri, who is running this capital recycling and IPO program.
Excellent. Matthew Merton, thank you so much for bringing that report to us. And of course, it is live on the terminal now if you want more details. But that is it for our show, Horizons Middle East and Africa. I'm Joanna Versace in Dubai with Jennifer Zabazaja in Johannesburg. Stay with us for Daybreak Europe. This is Bloomberg.